Have you ever been scrolling through the news and just felt like that constant storm of political and economic headlines is messing with your retirement plans? Well, it turns out that's not just a feeling, it's a real powerful economic force. And today, we're going to break down exactly how it works. I'm talking about that very specific feeling, right? You see a headline about a new tax proposal or maybe the national debt, and you get that little pit in your stomach. It's that sense that the solid ground you thought your financial plans were built on is suddenly starting to feel a little shaky. Well, if any of that sounds familiar, you are in very good company. In fact, new research shows that millions of people are actually delaying their retirement right now. And it's not just because of the usual ups and downs of the market. Nope, there's something else going on here. And that something else has a name. Experts call it policy uncertainty. It's this kind of cloud of what-ifs that's causing so many people to pump the brakes on their financial futures. So what is it exactly? Well, policy uncertainty isn't about policies actually changing. It's really about the fear, the possibility that they might change, and in ways we just can't predict. It's the not knowing that really gets to us. The Center for Retirement Research puts it perfectly here. It's not about what is, it's about what could be. Think about it this way. Imagine a really tight election, and the two candidates have completely different economic plans. No laws have been passed yet, but the sheer unpredictability of who will win creates this fog. That's the uncertainty we're talking about. And look, this isn't just some abstract economic theory. A brand new survey of over 1,400 people shows exactly how this anxiety is forcing them to change their real-life plans. And the numbers? They're pretty striking. First up, get this. A full 21% of people who haven't retired yet are actively putting it off. That's more than 1 in 5 people looking at the future and deciding, you know what, I just can't afford to stop working yet, all because of this instability. On top of that, a whole third of people are pulling their money out of things like stocks and moving it into what they see as safer investments. Now, that might feel like a smart defensive move, but there's a hidden cost, right? They're sacrificing that potential long-term growth that's so crucial for building a healthy nest egg. And this cautiousness, it even extends to just plain old cash. 28% of everyone surveyed, and that includes people who are already retired, are just hoarding more emergency savings. It's a classic defensive move, but it means all that money is just sitting on the sidelines, not growing, and probably not even keeping up with inflation. Okay, so those are some pretty big shifts in behavior. It really makes you wonder what specific headlines are keeping people up at night. Well, the survey actually pinpointed the top culprits. And the scale of this worry is just immense. I mean, look at this chart. At the very top, a massive 89% are concerned about news related to tariffs. Right behind that, 3 out of every 4 people are worried about the federal debt. And more than half are feeling anxious about the future of Social Security. This just shows that these aren't niche economic worries anymore. They are deeply held mainstream anxieties. Okay, so we've seen how individual people are reacting. But what happens when millions of us all decide to delay retirement, invest more conservatively, and save more cash, all at the same time? Well, it creates this huge ripple effect across the entire economy. All this caution creates what's really a dangerous feedback loop. Think about it. Widespread uncertainty spooks the markets, right? That lowers investment returns. That makes people even more scared to spend or invest. So in response, businesses pull back, which can lead to higher unemployment. Each step just reinforces the next, slowing down the entire economic engine. And the report is really blunt about the consequences of all this. This collective financial retreat, it isn't free. There are very real, tangible costs to playing it this safe, for everybody. And here it is, the key takeaway from the researchers themselves. The risk is substantial. It's basically a double whammy. It costs you, the individual, as you try to protect yourself, but at the very same time, it harms the broader economy that we all rely on. Which leaves us with one final and, honestly, pretty sobering question to think about. If this level of political and economic uncertainty really is the new normal, what's the true long-term price of all this caution? It's a question we all kind of need to consider as we plan for whatever comes next.